At some point between 2013 and 2015, two of the most technologically sophisticated companies in the world received invoices in the mail. The invoices looked exactly right. The letterhead matched. The contract references aligned with active vendor relationships. The payment instructions were precise and professional. Both companies paid. Together, they transferred more than $100 million to a man operating out of Lithuania who had never set foot in either of their offices. His name was Evaldas Rimasauskas. He did not hack their systems. He did not breach a single firewall or write a line of malicious code. He did not need a team of engineers or a sophisticated technical operation. He sent them fake invoices. The target. To understand what Rimasauskas did, you first need to understand who Quanta Computer is. Quanta Computer is a real company, founded in Taiwan in 1988. It manufactures laptops, servers, and hardware components for the largest technology companies in the world. Both Google and Facebook had legitimate, active business relationships with Quanta Computer during this period. Quanta's invoices arrived regularly, were processed through standard accounts payable channels, and were paid. This was not unusual. This was routine. Evaldas Rimasauskas understood this routine with precision. In 2013, he registered a company in Latvia. He named it Quanta Computer Incorporated, close enough to the real thing to be credible, different enough to be a distinct legal entity. It was a shell. There was no staff, no product, no business of any kind. There were only bank accounts, spread across Latvia, Cyprus, Slovakia, Lithuania, Hungary, and Hong Kong, and a stack of forged documents, the fraud. The operation Rimasauskas ran was methodical. He researched both companies' relationships with the real Quanta Computer. He studied invoice formats, contract references, and the financial protocols large corporations use when paying established vendors. He created fraudulent invoices that matched what Google's and Facebook's accounts payable teams expected to see from a Quanta Computer billing. He fabricated contracts. He forged letters that appeared to carry the signatures of executives at both target companies, authorizing the transfers and confirming the legitimacy of the payment instructions. The letters referenced real contract numbers, real business relationships, real deal structures. Then he sent the invoices. Over the course of the scheme, Rimasauskas submitted fraudulent billing requests to both companies through standard vendor channels. The individual transfer amounts were substantial, millions of dollars per transaction, processed as though they were routine payments to a trusted supplier. Google's accounts payable processed them. Facebook's accounts payable processed them. The money moved through the 6-country network of shell accounts, where it was immediately dispersed, converted, transferred, and distributed before anyone began tracing it. The total amount transferred exceeded $100 million. The psychology. This is the part of the story that matters most. Neither Google nor Facebook was careless. Both companies had sophisticated internal financial controls, dedicated fraud detection teams, and access to every security tool available to large enterprises. These were not organizations that cut corners on compliance, but both had the same structural vulnerability. When you process thousands of vendor payments a week, you build trust in established suppliers. The assumption, embedded in every accounts payable workflow, is that if an invoice matches the expected format, references the correct contract, arrives through normal channels, and comes from a vendor you already know, it is legitimate. Rimasauskas did not need to breach that assumption through force. He replicated the surface of it. He made the invoice look exactly like what the accounts payable team expected to see. The verification gap, the moment between receiving an invoice and calling the vendor to confirm the wire details through a separate channel, is where the fraud lived. Most companies never close that gap. Most companies never need to. The arrest. At some point in 2016, investigators began tracking the movement of funds through the network of accounts Rimasauskas had established. The United States Department of Justice worked in coordination with Lithuanian law enforcement authorities. The trail of wire transfers, despite spanning 6 countries and multiple financial institutions, was reconstructible. In March 2017, Evaldas Rimasauskas was arrested in Vilnius, Lithuania. He was extradited to the United States and brought to federal court in New York. In March 2019, he pleaded guilty to wire fraud and money laundering. In December 2019, a federal judge sentenced him to 5 years in federal prison. He was ordered to forfeit $49.7 million. The remaining tens of millions had already moved too far through the international financial system to fully recover. The companies Google and Facebook were not initially named in public filings. The original indictment identified them only as Victim Company 1 and Victim Company 2. When the identities became public, the reaction was notable, not because the companies had been defrauded, but because of which companies they were. Facebook subsequently confirmed that it had recovered the majority of its losses. Google similarly confirmed it had been among the victims and had recovered funds. Both companies declined to specify the exact amounts lost or the precise timing of the transfers. The fact that recovery was possible at all reflects the speed with which the investigation moved once it began. Rimasauskas had structured the account network to make tracing difficult. He had not counted on how quickly federal and international coordination could move when the victims were two of the most high-profile companies in the world. The aftermath. Business email compromise, the category of fraud that includes vendor impersonation schemes like this one, now costs businesses globally more than $2 billion per year, according to annual FBI crime reports. It has been the highest loss category of internet crime reported to the Bureau for multiple consecutive years. What the Rimasauskas case demonstrated was not a new vulnerability. It demonstrated an old one, at a scale nobody had previously attempted. The attack required no technical sophistication. It required research, patience, and the ability to replicate corporate paperwork convincingly. Any person with knowledge of how large companies pay their vendors and access to public information about those vendor relationships could construct the same attack. After the case became public, both Google and Facebook implemented additional vendor verification protocols. The broader corporate security community documented the case as a textbook example of social engineering at enterprise scale, a reference point used in training materials and compliance frameworks to this day. The solution is straightforward. When a known vendor's wire instructions change, verify the change through a separate, pre-established channel before processing payment. A phone call to a number on file, a confirmation through a different email address, anything that requires a second point of contact. This sounds obvious. Before December 2019, it was not standard practice at two of the largest companies in the world. Evaldas Rimasauskas served his federal sentence. He had stolen more than $100 million from Google and Facebook, using nothing more sophisticated than a fake company name, a letterhead template, and an understanding of how corporate payments work. They paid because that is what you do when an invoice arrives from a vendor you trust. New investigations Tuesday and Friday at Folded Bills.